What is this, like how big is the banking and financial sector?
From an investor point of view, if you take banking and financial services, it's the largest part in the Nifty 50. It accounts for around 38% weight in the Nifty 50. So it's an important aspect for an investor if he's investing through an ETF, from direct equity or from a mutual fund. It's a big sector. And what I like about it is that it's well regulated. So here, everything is organized. We have many industries where there's unorganized or organized, but in this sector everything is organized, it's well regulated, and we are, as you just said, we are underpenetrated. So if we take mortgages, which is a big part of banking, in developed countries it's around 80% of their total, the penetration is around 80%. In USA is around 52%. In India it's just around 10 to 15%. So there's a lot of room there left for growth. If we take household leverage to GDP, even there India is almost at the lower quarter, where we are just around 19%, and certain developed countries have even crossed 110%. So there's a long way to go in this industry, and as you said, there's a lot of need. And at the end of the day, what I believe is that you take whichever industry, banking is the backbone for that industry, and it drives economics, and it actually magnifies gains, or whatever could happen in 10 years. Banking and easy access to credit makes it possible to do that journey in just 5 years.
What all could possibly go wrong when you are investing in this sector, right? Where there is a lot of money at stake, there is a lot of regulation at stake, right? And while regulators are there to protect minority investors, the shareholders, not necessarily everything falls in place, because not every scenario can be taken care of, right? So can you give a few examples where it has gone wrong from an investment standpoint in the banking and financial sector?
Yeah. So what can go wrong? So if you just think of the banking business, you might wonder that it's a foolish business. You lend, you get 9%, but if you lose everything. So in terms of pure mathematics, it doesn't sound quite lucrative, but those are the risks. So if you don't lend properly, you can lose everything, and it's happened to many banks who chase growth very aggressively. This is a big issue there. And also what I think, like most of these mistakes have also been associated with many a times frauds. So if a promoter wants to defraud an existing company, first to defraud they need a revenue, and then they can siphon off money. But in the banking business, to defraud a company or investors, it's very easy, because all you need to do is raise deposits and then siphon off that money. So the risk in these businesses are very high. And apart from that, what I have seen is that the banking business, globally, if anything happens, like the slippages can be very fast and the shock waves can be very severe. So in 2008, I remember that after Lehman went bankrupt, or when they were at the peak of everything was coming out, that they were not managing everything properly at Lehman. In India, rumors started floating that ICICI Bank had some exposure to Lehman's European accounts. So this bank almost faced a bank run. I remember that Infosys founder Narayan Murthy, he had 1,000 CR deposits in ICICI Bank. He moved that immediately to SBI, and in an unprecedented manner, RBI had to come out with a disclosure saying that ICICI Bank has enough liquidity to manage their day-to-day activities. So these activities can be, or these things can be very disruptive if anything goes wrong, and because of their leverage, when they are hit very hard. And many businesses, what I've seen is that, first of all, in order to compete with the big banks, you have to do something different. Why? Because you don't have that cost of borrowing backing you. So all these small banks or microfinance institutions, they borrow at 11-12%. So they can't go and lend to the tier one borrowers, like let's say or Tata Steel and all, because Tata Steel itself borrows at 6.5%. So if you're borrowing at 10-12%, then you have to lend it at 20%. And when you lend at 20%, the risks are extremely high, and you end up making a lot of mistakes, and there is where all your calculations also go for a toss. So that is why what we've seen is that it's better for investors to stick with businesses which have a track record of delivering, which have access to low cost funds, and which have access to high quality customers who they can lend to. So this is where what we've seen works very well in this industry.